The difference between the parallel rate and the official rate last year was 32 naira, which is 22%. The difference between the official rate and the parallel market today is 3%. So that premium has disappeared. And this is good news. Now, where's the bad news? The bad news is that external reserves were $51 billion when Lamido came in. It's now $38 billion. We've lost 24% of our reserves. Not that we lost it, we used it to support the currency. So the currency gains you've had have been supported primarily by depletion of external reserves. And of course, profligacy at the public sector by the Ministry of Finance, the various ministries. The bad news is that the inflation gap, that's the difference between the money supply growth and the rate of growth in GDP, was 8% last year, it's now 15%. So this economy is more prone to inflationary pressures now than it was at this time last year. The bad news is that credit growth has declined. It went all the way from 29% private sector credit growth to something like, it went negative all the way down to about 2, 3, 4, 5% now. Banking penetration in terms of branch presence across the country, ATMs and all that, have actually reduced because of the banking surgery that is taking place. The other thing is that payment system efficiency. We now have e-payments for checks above anything below 10 million naira, above 10 million naira. So the velocity of circulation of money has actually increased. The value of checks cleared have actually increased. So you have some of the good things and you have some of the bad things. In terms of bank penetration and the banking system as a vehicle for chasing growth, we haven't achieved anything. The other thing that you have to realize is that in terms of bank regulation, we've tinkered with universal banking and corporate governance, liquidity ratio, cash reserve ratios, and all of that. All of these things, we've tinkered with them, we've brought them, we've been more accommodative in the monetary policy management, which has led to quantitative easing in some respect and the inflationary pressure. Now there's a clear and present danger that this country will be confronted with huge inflationary pressure in the next month or two. These are the challenges that the central bank faces in terms of monetary policy management. The approach that will be adopted, there are 3 rules for monetary policies. There's the fixed rule, which is you actually you do nothing basically. There's the discretionary rule, which means that you anticipate developments and then you take steps in anticipation. But then there's the feedback rule, which is what is being used in Nigeria. Feedback rule means that you get the data and you now respond to it. I think that is what is happening now.
What road do you think we should travel?
I'm a monetarist, so I always believe that usually your money supply growth and your GDP growth should be almost about the same so that there's no gap. But monetarism means that very painful steps have to be taken and a lot of sacrifice has to be made.
You think Nigeria needs very painful steps?
I think the country is in pain anyway. So what you are doing is putting the pain in perspective. So and managing it that way. But then there's the Keynesian rule, which is more or less the feedback rule, which is being applied. The feedback rule allows you to do certain things as long as you can respond. But Keynes said in the long run we are all dead, so let's take care of the short run. So that's where we are.
Dr. Aganga will be at the finance minister will be at the policy dialogue tomorrow. What will be your words for him? What are the discussions likely to look like? Because right now with those both economic data, as it were, fiscal on one side and the other markets on the other side in terms of what is money supply, monetary on the other side. There has to be a convergence, as it were, somewhere to support what Lamido Sanusi has always been a sing-song. In other words, someone has to fix roads, fix electricity, fix this, fix that. There has to be more of activities, proactiveness, as it were, from the Ministry of Finance, which is the Treasury. The Ministry of Finance in Nigeria had always been more of a political office rather than a complement to the regulators on Broad Street in terms of making sure that things work and work very fast.
No, I think that monetary policy is about exchange rate management, money supply management, interest rates, and all. They complement and reinforce fiscal policy. Fiscal policy is about taxes, subsidies, expenditure, and actually driving growth. Okay, so the central bank really has no direct responsibility for infrastructure and all of those things. What they should do actually is to confine themselves to the areas of monetary policy and ensure that monetary policy is efficiently pursued. But they have to complement, and so the coordination, what you had prior to now was that there was coordination between the central bank and the Ministry of Finance. It was seamless. So you didn't see it, but it was very efficient. And that helped in the last 12 months. I think that is something that you must give kudos to the administration. Now, what Segun is going to have to confront is how are you going to manage leakages? How are you going to manage, in fact, yesterday there's already a supplementary budget to review downwards the budget. To review a budget which you actually approved only 3 weeks ago or 2 weeks ago throws up some issues. Who approved that budget? Who advised the approval of the budget only for 2 weeks later for it to be reviewed? 1. 2, how come days after the budget was approved, the Minister of State and Finance was already raising the fears and this alarm that the expectations gap is there, and that if we continue spending the way we had put in the budget, we will create a major crisis for ourselves. So something is happening. There's a crisis of false expectation here, and there's a disconnect. So we need, first of all, so Segun and Remy would have to actually manage that process of getting the buy-in of the executive arm of government. 1. 2, coordinating their own activities with the monetary policy authorities, right? Because don't forget, there's policy autonomy and instrument autonomy. What the central bank has is instrument autonomy. The policy is going to come from the executive arm of government. So you can't just go around screaming about autonomy. No, you have to implement autonomy within the context of the calling.
We don't get so much about, we don't get to hear much from the government, as it were. Everybody's busy with politics and politicking.
Yeah.
Well, at least President Obama was there on the front line taking very tough stance on banks and bankers on Wall Street. And you can hear almost the same thing what the US SEC is doing and what Senator Dodd was doing on the floor or on the Capitol, as far as putting everybody in place. Before Gordon Brown left office, he was also coming down very hard from number 10 down in streets. But nothing is out of that.
No, the quality of leadership in those markets are quite advanced and mature. Right? People get into office prepared with multiple backgrounds and all of that, and they're prepared for those assignments. Here, with all due respect, the quality of leadership needs some ramping up and improvement. So that, but we have to manage what we have. So it is the job of the professionals within the government, and that's why I say Segun and Remy, Lamido, Sanusi, and others have to get the buy-in. And part of their process is to actually educate and build capacity within the governing body. Don't forget, the politicization of economics is the most dangerous thing, but that's what happens. But we like to, let us economize the politics rather than politicize the economics. All right. So their job is actually to economize the politics, while the politicians like to politicize the economics. Somewhere in the middle, we'll get some kind of equilibrium.